Welcome to Bearish. We're not financial professionals, and this is not financial investment advice. Enjoy the episode.
All right, guys, we're back to being bearish.
It was going to be cut out anyway. Oh, yeah.
Bearish!
Welcome to Bearish!
Back.
Figured out our identity crisis that we were having for the past, 2 episodes.
Feels like I'm back
we're
at home.
Yeah. We're having trouble figuring out who we were, you know?
Yeah.
Some of us.
Tried to merge. Didn't work out too well. We're back. For the other party.
Bearish.
But we're back. We're back. We were fine, but we're... I don't know.
We feel good, too, you know? It feels great.
Look good,
Bearish,
feel good,
the
play
claw.
good. The
Copyrighted.
claw.
Copyrighted. Yeah, you know, we dabbled in a little, thingy thing for a few weeks. The thingy thing just,
Wasn't us.
didn't work out. You know, it just did. That's it. No hard feelings, but it just did not work out. We tried, we pushed, we gave it our all, and we're back to bearish. All right, that's about it. That's all we're gonna say about that one.
We need to trademark that logo.
Fast.
Yeah, we did.
We already did.
Yeah, we
Don't
already-
do it.
we already-
We already did. Don't even think about it.
and the name, so no worries.
LLC, everything that we could possibly, anything with the name bearish or that rhymes with bearish, we've out LLC. So don't even think about it.
All right.
All right, Jared.
What are we talking about?
I thought you had something you said you wanted to say before.
Oh, before we got into the psychology of trading. Well, it was just news that broke today. Joe Biden with 43.4% capital gains tax on anyone earning over $1 million.
That's a lot of money.
Which,
That is a lot of
for
money.
most
it's
of
also
us.
a large percentage.
Yeah. Well,
That feels
50%
like
of anything
robbery.
is a lot.
Yeah.
That feels like robbery.
50%. I don't know all the details. I'm not going to act like I know all the
I don't
details. And I don't know a damn thing about politics. But I know 50% is a large number.
That's the
And
problem.
that's how I feel about
we
that.
don't know much. We're 20-year-old college kids. Logan's 21.
I'm not making a milli.
And yeah, so that's the thing. $1 million is a lot of money. I looked up how many people earn $1 million, and it says in the United States, 236,000 people earn $1 million a year. For context, there's over 300 million people in the United States of America. So
330.
yeah,
It's actually not that much. But still, think about 50% of a million.
Right.
You're back down to 500K.
right. But I don't know.
Quick
I don't
math.
know. See, because there's income tax and there's blah blah blah. This.
I would
tax
just
and-
tell him to charge me, or I'd just tell him to pay me $999,000 a year.
Maybe in.
Yeah, I bet there's ways around it, though.
Yeah. Well, I don't know.
any
Not
kind
with.
of thing.
There's no way around it with the
In
capital
a legal way, of course.
gain. But then is it people earning $1 million or is it people making $1 million on a investment?
It's capital gains. So
It's
it's
capital
strictly
gains. Yeah.
whatever
Yeah, go
profits
ahead.
you get from, trading a stock or, basically any sort of
Investments.
investment.
Does that include real estate?
And capital? I don't think so.
Capital gains is it is.
It
It's
is?
everything.
Oh.
Yeah, I'm pretty
I
sure.
would
Pretty
think
sure
so.
it's everything.
I think it's any investment.
Yeah.
Yeah.
Like any investment.
Any
Yeah.
investment. Okay. Not just stocks.
That's kind of crazy. I learned something about options yesterday. It's just kind of quick, but it's the price of the premium moves based on point gains, not percentage gains. So say a 20% increase in the stock that's worth $1. It's only 20 cents. The premium's not really moving at all, but it's still a lot. It's still a big gain percentage-wise. Whereas, if Tesla moved 20%, the premium would blow up because 20% of, what is it at, 700 something? I don't know the math, but it's a lot. It's a lot of point gain.
Mm-hmm.
So the premium would move a lot more. Because I was looking at a stock yesterday or today, that Vinco Ventures that I mentioned last week, and I was looking at options, and it moved roughly 15% today. It's moved 20, 25 in the past 2 days, but the premium prices have only moved a couple cents, which equates to what? It's been $10 move. But the stock itself, if you own 100 shares of it, you'd be up 30, 40 bucks. So it's a little FYI for you. Options move on point values, not percentages.
I didn't think
Just
they
wanna
did
throw that
move
out there.
percentage wise.
I didn't really think about it like
Yeah.
that. I've always thought about it as a stock's up 20%. The premium should be up like a crazy amount, but
Right,
it
but it's
doesn't
all
work like
relative
that.
and stuff like that.
So does that mean that if you do like let's say you trade options with a much more expensive stock, would you potentially make more off of the option because the premium moves so much?
I would say yes, and what I related it to is like GME and what was the other one? AMC. Like they both moved like 100% in like a week, but the option prices of AMC moved a lot less because it was less of a point value.
Right.
You know what I'm saying?
Yeah.
Like GME went from 60 to like 400 or something like that
500
points. Yeah, exactly. Whereas AMC moved from like
7
3
to 13.
16, 20,
Yeah.
20 something.
yeah, it was like 20 something.
Isn't that what
Like,
one
yeah,
of
it's
the
a lot.
Greeks is? Like one of the Greeks says this is how much it'll change
Delta.
by for every
Delta.
dollar change. Yeah, so every dollar change, not percentage change.
Yeah, I just never really
Yeah,
thought
dumb
about it like
bitch.
that because I was looking at percentages, but everything's in terms of percentages when you look at stocks.
Yeah.
Like,
I know.
that's really
I'm
how it is.
kidding.
That's very
Fuck
true.
you.
But
Oh,
hey,
guys, come on.
just to finish off with this capital gains stuff, and then we'll move on. So it looks like Biden wants to raise it for people earning $1 million like salary, like annually, not off, or maybe it is
Not the
maybe
gains
it's both.
themselves.
I don't know. Maybe it's both, but definitely for the people earning $1 million annually. Definitely. Okay.
Wow.
So say you're single.
That sucks.
Say you're
I
single.
guess suck.
Trump cut it to 20%. Anyone over $441,000 would be 20%. Biden wants to double that. So if I'm
Jesus.
earning $400,000 and I'm single and I do a long-term capital gains, it's only 15%. So I think it's just a really huge step up once you hit the million.
Yeah.
I think that's what it is, but I don't know. And I think it's going.
All in all-
it's funding. It is funding universal pre-K, childcare, national paid leave program for workers, and free community college tuition for everyone.
Some
Yeah.
nice social
Probably
Me and
programs.
Max.
Probably with
Yeah.
more, but
All in all, the markets did not like today.
no, it did
There
not.
was a
It was
significant
green,
drop.
and then it
Quick.
said no, thank you, and it went down.
Yeah, it moved quickly, and yeah, markets didn't like
It
that.
ended down 320.
I don't know. It went a big. It was kind of sideways, and then it just dove.
Yeah,
I don't know what it ended at though.
I think it was
But,
down 320. But yeah, you're
yeah,
right.
no, I didn't like it.
Not a fan. All right, Mike, tell us what you wanted to talk about today because it's really interesting.
Yeah, so we kind of touched on it a little bit in previous episodes, like in passing. But the thing I wanted to dive more into today was called the psychology of trading. And we talked about this in a lot of different ways. But one of the biggest ways when we were talking about it was like, when you see red on your portfolio and then you immediately just want to like sell because you don't want to lose any money. That's a prime example of a psychological situation that you should not let happen to you, because if you do, you're playing the game wrong. And so basically today we wanted to bring up like a few points about it, and then we can, discuss how to avoid those things and how to play the game properly, I would say, and not let your psychology, your human nature badly affect the way that you work in the stock market. So that's what I wanted to bring up today.
Remember that book I brought up the last episode or 2 episodes ago,
Yep.
where it said by nature human are lousy investors.
Yep.
We suck because of our DNA. Yeah.
That's
We
precisely.
get a herd mentality. We get scared and we sell if other people are selling, and we buy if other people are buying. And yeah.
Yeah. So that's actually, keep those in mind because those are 2 great ones. But Max, go ahead, and then I'll sort of outline what I'm sort of thinking of in terms of psychology.
The way I think of this is basically just make a set of. No one's going to invest the same. Obviously, the big time investors, there's similarities, but it isn't a set code where you can read a book or whatever and it says this is what you do at this point, this point, and this point, and everyone follows it.
Right.
For my personal opinion, just make rules and stick to them. You know, that eliminates a lot of the emotional aspects of investing
Yeah.
or trading. because you can quickly dig yourself a hole if you react on emotion.
Yeah, that's super important.
Yeah.
That's really what
That's
I have
super
to say.
important. That's actually
I
one
actually
of the
like
points.
that a lot.
Yeah, that's one of the points.
Yeah, I was gonna
bring
say
up.
you can change the rules as well. I feel like, but just don't make it a spontaneous thing. Like, kind of stick with a pattern for a while, and then if you say, "Hey, I've noticed I'm taking gains on majority of my things a little bit too early. What if I tried sticking in them a little bit longer?" You know what I mean?
Exactly.
It's just, but you
The
do have
rules
to
are gonna
set
be
the
fluid.
rules.
Another.
Yeah,
Right, you're correct. They're going to be fluid, but if you set a certain type of rules and then you say, okay, this works, I'm going to continue with that one. This one doesn't work. I'm going to critique it a little bit, and then we're going to move on. I just think if you have a set of rules, it creates a guideline and kind of foundation for the way you trade and invest that can be mimicked, whereas when you react on emotions, it really just skews a lot of different things, and there's no benchmark for anything. You're just kind of, oh, I got lucky on this one, and I lost big on this one.
Fantastic points, all dealing with what I was going to bring up,
Thanks.
like little pieces and parts of what I was going to make. But essentially, the overall thing I wanted to lay out is like there's two big emotions that you'll experience when you're trading. Number one is
I
fear.
guess. Fuck. Never mind.
What's the other one? What's the other one, Jared?
What's the
Greed.
second one?
Greed.
Exactly. So fear and greed.
Wow, you must have read the article.
Yeah. Good job, guys. So these
Time out.
are two really big emotions that you guys should keep in mind whenever trading or whenever investing, regardless if you're a short-term or a long-term investor. So let's start off with fear. How many of you guys have been fearful whenever your portfolio went red? Me.
Right now,
Right now.
Everyone who
IVR.
has ever touched an investment.
scared every day.
Exactly.
if you've ever bought into IVR, yeah.
So rule
Don't want to open my
So
portfolio.
of course, whenever you lose money, you can be scared of this. It's probably it's a very natural thing to be scared whenever you lose money, especially if you don't have a lot. Especially for you guys who are investing like maybe $100 or $200, and that's really all you have, and that's all you want to invest. Yeah, it can be super scary if you lose like $50 because that's what 25%.
Half of your net worth.
Yeah, exactly.
Yeah.
Exactly.
Not good.
So
Right.
that could be
Don't want to do that.
that could be a lot for you guys. But the important thing to remember is that just because you go red doesn't mean it's over. Like, you shouldn't panic sell, essentially, is the rule there. And so that's sort of in general. Now, here's the thing, a difference between short-term and long-term. If you're a short-term trader, yeah, you should probably, keep this in mind and pay more attention. But as a long-term, don't look at it. Especially if you're buying something like Apple or if you're buying something like Palantir. Dude, I bought Palantir and it was at like 23 and it shot down and I made a terrible mistake. I was supposed to go long term on this thing, but then I panic sold because I thought it was going to crash. But it was a bad thing because I used my emotions got the best of me, and now it's back up to where it was before I sold. I think I mentioned this story before, but that's a classic example.
Yeah.
If you're going long on a stock, don't panic if it goes red. Just leave it alone. Short term, maybe a little bit different. And the third point I want to bring up about fear is that most of the fear that comes from, being in the red and stuff is fear of the unknown. You don't know if it's going to go any lower. You don't know if it's going to, drop to zero or something like that. But the best way to probably mitigate that, and you guys can comment on this, is educate yourself more. Actually look into the company, do your research, and the more you know, the less you'll be fearful. It's like when you're afraid of the dark. You don't know what the dark is when you're young, so naturally you're afraid of it.
Bro, it's scary. When you watch a scary movie that dark, you don't know
Yeah,
what the fuck's
but
going
then
I'm still scared of the dark.
a little bit. But
I run to my door.
as you get older and you
After I-
learn more, you realize that the dark is not a big deal. It's just the absence of light. So
Yes, it is. Yes, it is. The dark is a big deal.
Yeah.
but you guys get my point.
I see what you're saying. I see what you're saying, Mike. And I think that all just comes for full circle of being prepared and having a plan, and just no matter if it's short term or long term. For example, long term, if you know what the company's worth, then you know when to sell, when not to sell. If it goes down, fuck it, buy more. But short term, you are on a much shorter leash, because
Yes.
if you're swing trading, if you're options trading, there's an expiration date. There's probably a certain point where you should maybe cut your losses if you see it, turning for the bad. But yeah, you need to have a plan in place no matter what kind of investing you're doing, just so you are not acting on emotion, because it's not good to act on emotion, whether it's investing or any decision you ever make ever.
Argument,
You're not
resolvement,
thinking-
anything that involves
Exactly. You're not
making really
thinking
important
clearly.
decisions.
You're not thinking clearly.
Correct. I was reading a book by Jim Cramer. I know, Jared, you don't really like Jim Cramer.
No, I like
But-
him.
doesn't
I don't
like
like
his
his. I don't like
books.
his writing.
Yeah.
I don't like his writing.
Oh.
Yeah.
Well, it's a short line, and it said one of his mentors, he said, he generated an investment philosophy in me that allowed me to let my gains run and cut my losses immediately. I think that's a pretty good. I mean, we've said, don't panic if it turns red,
Mm-hmm.
but at the same time, this goes back to the rules. I think if you say, I won't let my investment go past X percentage of losses.
Very
you
good.
know, once it hits that, you know that your investment, you know, maybe your speculative standpoint, you didn't look into it enough, or you didn't do enough research in it, and it kind of went south. And in order to stop, you know, the bleeding, cut it short. But then those gains that you have, you know, that money technically never really was yours. So just kind of let it, in some instances, just kind of let it run and let it gain.
Yeah.
And, you know, if you really believe in your trade or your investment, then let it go and just have it build on it.
I have a
on
perfect
itself.
story for this. So when I was investing in Doge like 3 days ago, or like, was it this week or last week?
This
La-
man said investing in Doge. Listen to you.
Investing. I was swinging it. So
I think it's a
I
good
dumped a
investment.
lot of money into Doge, and it blew up the next day, and I had a lot of gains from it, and I was like, oh my gosh, this is so awesome. I'm just going to let it keep gaining and gaining. And then it dropped a little bit, and I was like, uh-oh. And that's when I realized I need to set a point where I don't want to lose any more money. If it goes below this point, I'm just going to take my profits and go and leave. And that's super important because that allowed me to say, okay, I'm totally fine with it going higher than this, but if it goes lower, I'm just going to take it and be happy. And that's what I did. It dropped below like $2,000, and then I just took the profits because that was my stop loss. My stop loss was 2 G's. And I said, okay, done.
Right. You can look at it from a perspective of, if you want to let it run, okay, take out your initial investment. So then you're just playing with house money.
Yeah.
Take out all of your money so you're down to virtually zero risk, and just see what happens with it if you still believe in it. Now, if you're happy with your profits, yeah, by all means, take it and, you know, happy days.
Kramer's big on
But,
that.
Yeah.
right, just take out your initial investment so the money really isn't even yours anymore.
And can you give an
True.
example of that, Max, about taking out your initial investment? Because maybe many people might not know what that means when they just hear that.
So say we'll stick with Doge because what a sick investment it actually is. Say you put $250 into Doge, and over the past week it had a substantial jump. It went from like 6 cents to it hit high.
Whatever.
50.
Yeah.
So say your 250 turned into $1,000, and to mitigate your risk, virtually all risk, you take out your 250, your initial investment. And let that gain of, what is it, 750, quick math?
Yeah.
Am I
Yes.
right? Let that just go, because that's not even your money anymore, you know? Like, that's not your investment that you put in. You took out all of your money. Your risk is completely eliminated, and then you're just letting, quote-unquote, house money do its thing.
Yeah.
that sum
So
it up
you
pretty
sell
much?
you sell as much as you initially put in, and just let the rest ride.
Right. To kind of switch gears, I was watching a video the other day, and he put his, like I said earlier, there's strategies, you know, there's personal strategies for everyone. It's how you want to invest or trade. The guy was saying, it's this In the Money guy on YouTube.
Oh, yeah.
I think he's
Great
a
guy.
great educational guy to watch. He kind of puts it into perspective for young kids. He said the way he does his portfolio, it's about 50% long-term investments, and then, or a little bit over 50%, and then the rest is more speculative, on the side of speculative, but it's still very educated and somewhat long-term. He was talking about leaps, which is like an option strategy, and its time frame is about 9 months out, is
Yeah.
what he said. So it's still long-term pretty much, but just not as long-term as, you know, a couple of years. But he was saying his long-term investments are basically secure. You know, he's done a lot of research in the company. He knows that they should increase because the market has a tendency to go up over years' time. He said speculative should be more or he said his long-term is more for hedging against his speculative, because his long-term is, like I said, always going to go up, or most of the time going to go up. And if he does happen to misjudge something in a speculative side, the long-term will cover the losses. And what the speculative is supposed to be, it's supposed to add value to your long-term. Does that kind of make sense?
Yeah.
obviously you want to win on each side,
Yeah.
but the long term is more for hedging. There's a bigger percentage of winning long term, and so he wants his speculative to kind of boost it. But if he doesn't win, he has his long term that basically hedges against it and kind of, minimizes the losses.
He just needs to be careful.
I thought that
to
was
not
interesting.
not have those things cancel themselves out.
Yeah.
Yeah.
Right. That's why you need to still be, diligent in your research on your speculative. And still, 9 months out is still pretty long amount of time. But he kind of put it into like a good perspective. Like, that's a good way to look at it. We've had this argument of long term versus short term. You can do
Part two
both,
coming soon.
really.
Yeah. Yes. Yes.
Yeah. You can really do both. And he put it in great perspective of, his long term is most likely always going to win, and hopefully a speculative add to it. And if not, he has his long term to hedge it.
Right.
I thought it was pretty interesting.
So Kramer's kind of way of mitigating his risk is he takes out his initial investment, which does kind of cut into possible gains, but at the same time, it really lowers his risk. And this guy kind of lowers his risk by playing these really super safe, at least in his opinion, long-term plays. And that kind of cancels out any misjudgments in his more speculative plays, in a way.
Right. Yeah.
That's interesting.
Exactly. His speculative is to add value to his long term, but if they don't, he has his long term to help against
Interesting,
the
yeah.
losses.
So a lot of what you
That's cool.
guys,
Kind of cool way to
a
look
lot
at
of
it.
what you guys have been talking about leads into the second emotion that you need to control whenever you're trading, which is greed. And you've already mentioned a lot of stuff. Everyone wants money, right? If it goes up a little bit more, we just want to let it keep going up and keep going up and keep going up. And it's like, let's just let it go.
I have the perfect example once you're done, Mike. Continue.
Most of the stuff about greed we kind of touched on, all right? The goal here is don't be greedy. Like don't let that affect your trades badly. If you're too greedy, you can become a bag holder. It'll go up all the way and you're like, "Oh my gosh, I made so much money." And then it crashes because there's no support. So the thing falls to the depths of the earth and you've lost all
Also,
those
another
gains.
thing humans are terrible at. It's in our DNA.
Yeah, exactly.
Just greed.
Just take what you get and go. And so that leads to setting stop losses and stop gains. Like once you hit a certain profit point, cut it. Like set goal. This is why I said in the beginning, like a while ago, set goals for yourself. Because if you don't have any goals, you're just investing wildly and you don't have any sort of framework to guide your decision making. You're just making whimsical decisions based on like, I have $2,000 here. Maybe I'll just like take it now, or maybe I'll let it double to 4,000. Like that's really bad thinking. Just say, okay,
Yeah.
I know this is going to go up at least this much. I want to set this limit. If it goes below this, or if it starts coming near this, I'm going to sell and just take the profits and be done. It's really nice. Just set these sort of goals in mind, and it helps and the thing is, it takes the stress off of you. Because you're no longer asking yourself, oh my gosh, what if it goes here? What if it goes there? What if it goes super high? What if it goes up another $1? It's like you're not asking yourself that anymore. It's like you're asking yourself the question, when is it going to hit $1? Okay, when it hits $1, I'm going to do this. It's no longer a cycle of questions. It's one question and then a decision right afterwards. There's a decision that's made.
Mm-hmm.
So it's
It's all about having a plan in place, and that goes long term and short term. If you are doing long term and you want to know the intrinsic value of a company, what the company's actually worth on a per share basis, if it hits that price, okay, you can sell, or you can do what Max said and take out your initial investment. And if it goes up, then it goes up. It keeps going up. You're not playing with your money anymore. Or you can just keep it if you think it's just going to keep going up. But on the short-term basis, I mean, whether you're looking at charts, graphs, indicators, trend lines, all these, there's so much stuff with short-term that it's almost, it's really stressful. And that's why I can't do short-term. I cannot do it.
I hate it.
I will
Yeah.
be looking at my
very
phone
stressful.
24/7, wasting all of my day just looking at cents move. Oh shit, it went down 10 cents. I should have sold. I can't do it.
Yeah.
I cannot do it. It
Perfectly.
drives me insane.
Yeah.
It's the thrill.
Yeah.
It drives me
So
insane.
overall, thing to learn about greed is, don't let the money be the only thing guiding your decision. Be strategic. Don't let the gains just let you keep your money in there. Like set some goals, stick to those goals, and let those goals drive your decision making versus your own personal feeling of the potential to make more or the potential to lose a lot.
Mhm.
Just set those goals and let those goals make your decisions for you. Your life will be a lot easier, and you'll make money more consistently that way. or better
Right.
decisions at
It's
least.
the most cliche thing. It's the most cliche saying, but it goes with don't be greedy. It's everyone wants to hit this home run when they begin investing or when they're investing. Everyone wants to hit the home run of, oh my God, I made, so much money on this one thing. And I just kept on, I wanted to let it go and let it go. But if you let these $25, $50, $30, they add up. If you hit that 10 times, you're making a lot of money versus the one time that you got a $200 gain and then you tried to hit a home run again and then lost $50 of it. You know what I'm saying? These little bits add up over a year. If you get, $50 every week or so, like that's going to add up over a very long time, over the one time that you hit the $200 one.
It's better to
We're
be
giving
consistent.
this great advice, but all of us we've all done this. I know we have. We've
hell
all
yeah.
made a lot of money on a stock, and then we've sold, and then it keeps going up, and then we're like, fuck, I should have held. And that's annoying to say that happens, but it's human nature. My friend Sam texted me today. He goes, Jared, I'm a paper-handed bitch. I'm like, okay, that doesn't sound good. It sounds like you lost money. I said, what happened? He goes, I was up 300% and I sold, and then it went up more, and I was like, fuck you, dude. Don't text
made
me.
money.
You made profits.
He goes, what's better, 300% or 360%? I said, Sam, what's better, 300% or 0% or negative? Like, relax, dude. You're fine.
To be honest, whenever I sell a stock, I like to take it off my watch list and not look at it for a very long time. Because if I sell it and it goes down, I'm like, oh, sick, I'm so awesome. And if I sell it and it keeps on going up, I'm like, oh, I'm the dumbest investor ever.
Me
but it's like,
on Doge.
Dude, it's ignorance is bliss. Just don't look at it.
I deleted both of them, ETC and Doge, after I sold because I was like, I can't handle the knowledge that it went up or down afterwards because it's just gonna make me more stressed.
Just do not look at it.
Yeah, you have to rewire yourself. Like, who cares, dude? You made money. You're fine. Who cares?
Yeah.
I know,
Dude,
Logan.
another thing about that Doge trade is that really scared me, but I think is valuable to know. I made quite a bit on that, but it didn't feel like a lot.
Dude, we get it. You're sick.
Gains.
I know, right?
Gains.
2 G's, bro. You're cool.
No, it was more than that. I was just being
God.
modest.
I'm sorry, Mike. I'm sorry.
No, you fucking peasant. It was more.
I'm not trying to make that point. I'm trying to say it's weird how the gains it didn't feel like a lot, but it was, and that's what's really bad about the human psychology is that we are more reactive to negative emotion than we are to positive emotion. So gains will not make you as happy as the losses, which is really hard to combat.
Well, I don't get happy.
Not
when I
happy.
lose money.
It won't emit as much of a reaction from you as
Right.
a negative emotion or as a loss.
Right, it's true. You always, it's kind of natural to always want more. Like you reach a goal and you're like, all right, but what next? And you don't really feel the satisfaction of reaching that goal because you're looking forward. It's like $100 as a little kid was like, oh my God, this is amazing. But $100 now, I'm like, oh, cool. Like I want 500.
Yeah,
I lost 300 a day. It's like it's just pocket money now.
Right.
That's Wall Street, though. Wall Street is driven by greed. That's all it is.
Oh,
greed.
yeah.
Greedy bankers, greedy fund managers wanting more. That's what it is.
Absolutely.
I love it.
Yeah.
And I'm gonna bring in Warren Buffett because that's the GOAT. That's my man. A big. So
What are you doing, dude?
So he's rewired himself, and I've also rewired myself because when I first started investing, I hated when stocks went down because I lost money. I lost money, right? You guys. Listen.
Listening.
All right. So when I first started
Listening.
with stocks, I hated when stocks went down because I lost money. Okay, but Warren Buffett has a quote: "Be fearful when others are greedy, and greedy when others are fearful." I want the market to crash. I want everyone in the
We
market
know.
to
Wow.
absolutely go bankrupt.
We're well aware.
Jared,
We are
that's
well aware you
terrible,
want
dude.
to
No, it's
crash.
not. It's not. I mean, it is
That's
terrible.
Dude, I'm gonna keep it
awful.
real.
For the
I don't think
American
we've ever
people?
brought up a stock. Go for it.
What?
I'm just saying, for the American people, that's terrible.
Oh yeah, it's terrible.
Awful.
No, I don't think we've ever brought up a stock and Jared's like, I like that. It's
Oh,
always
come
like,
on.
no,
Yes, he
overvalued.
has.
Don't
No,
like that
he
one.
has.
There's been about there's been Amazon and eBay.
Facebook.
I don't think we've ever brought
And
up-
United
Well,
Reynolds.
do you guys want to listen? Do you guys want to listen to the stocks you brought? You brought up IVR, Doge, Ethereum Classic. Like, what do you want me to say?
ETC might
Dude,
actually
that's
be
good.
okay,
Ventures,
to
what
be
do you guys want
honest.
me to say?
No, ETC. Did you know the ETC has a cap on it? So it's actually might be feasible with that one. The other ones are not capped,
Don't
which is a
care.
problem.
Don't care.
You don't
Mike.
care.
No
Oh,
cap.
when you're wrong, you don't care. I see.
No. Oh, I'm serious.
Oh my goodness.
But if you are a long-term investor, you
Yeah.
want stocks to generally go down so you can buy
Yes.
more.
Yes.
And then you want them obviously want them to go up. But
Depends on where you started.
the height at which the stock market is at right now, I promise you, no investor, no super investor, great investor, long-term investor is buying right now. No one. None of them.
Is Warren Buffett sitting on cash? Yes or no? Did you call him up and ask
hundreds
him?
of billions.
You can just say
Yes.
hundreds.
He's
of
rich.
billions.
Hundreds of billions.
There you go.
I think it's up
well,
to
that's-
yeah.
I'm sure he is. I
No,
thought
he
he
is.
was.
He
I was
is.
just making sure.
Yes, well,
How do you have 100
I saw a
billion
Goldman
cash?
Sachs-
Kathy Wood sitting on
Wild.
cash.
he's yeah. I think it's up to one. It's a little under 2, but it's a lot of money. It's a little 200, not 2 billion.
It's a
200. It's a little under 200 billion.
Yeah.
But
Not too much.
That's pretty good.
Yeah, not bad.
But I want the sky to fall. I want the sky to start falling. And Warren Buffett says when the sky starts falling, you better go out with a wash tub and not a teaspoon. So you just throw all your money into all the
Wow.
on sale. I mean, come on.
Is he a fucking poet too?
I'm gonna start making up these shitty like just quotes, and then just because I'm rich, they'll be great.
I don't think it's shitty,
No, I actually do think it's good.
Good advice.
but I mean, it's just it all depends on
Practical.
how you want to invest.
Yeah.
Like if you're doing short term and the market starts to turn, you're probably gonna sell. If you're doing long term
Probably.
and the market starts to turn, you're probably gonna hedge, wait for it to bottom, and then buy more.
I've never brought
Correct.
a washcloth or a tub outside when it's raining.
Well,
Warren Buffett
is
does.
it raining
I
gold?
bring an umbrella.
Is it raining gold?
It's a metaphor.
I don't think so.
Well, that's what
I've
he
never-
said. He said if it's
That'd be
raining gold,
sick. If it's raining
raining
gold, we're all
gold.
rich.
I would probably.
Well, I
it.
guess that's
bring a
why
wash
you're
tub.
not like Warren
That would
Buffett.
hurt.
Yeah, it wouldn't be outside for long. That shit would kill you.
It'd be like hail.
I think we all need to go
So
get some
dumb.
wash tubs now.
I don't even know what a wash tub is.
Is that what he called it, Jared? A wash
a
tub?
wash tub?
Or what did he call it?
The fuck is a wash tub?
What do you guys?
A
Thank you guys.
bathtub?
Thanks for tuning in, guys.
It's the same thing.
We'll be right
I've
back after
literally
this short
never
break.
in my life heard it called a
Max, what the fuck, man?
Logan, when have you ever used the term wash tub?
I
I'm gonna go
personally,
hop in my wash tub. I'm gonna take a
but
take
you,
a bath in my wash
you
tub.
know what
He's
it
90
is.
years old.
Outta
Guys.
here,
Give him
you're
a
calling
break.
it.
He's 90
Get the
years
fuck
old.
out of here.
But you know
You're
what a
calling it
wash tub
You
is,
know what
right?
it is?
Yeah, my fucking wash tub in my bathroom. Don't
No,
have to be, oh, I know what that is. Oh, my prestige high class. I have a wash tub in my bathroom.
Come on, you know what
No,
it is.
you have a fucking bathtub.
Yeah,
Shield
it's a.
yourself.
You call it a bathtub. Yeah, everyone calls
Everyone
it a
calls
bathtub.
it a bathtub.
Yeah, yeah.
99.9% except for Warren Buffett calls it.
All right,
But
Max,
like you,
Max,
but like you
you
know what
wanna-
a you know what a
I just don't
wash
want to
tub
be talked
is,
to
right?
like I'm
He was worth
stupid
$100 billion
because
and
you
you
use
want
the
to shit on
word
his verb. I'm sorry.
wash tub. Please never refer to it as a bathtub again. Just call it a wash tub because you call it a wash tub so
He's
often.
worth $100 billion and you're pissed he called it a wash
This
tub.
is why.
No,
we're
I'm not
poor.
pissed.
No,
I'm
no,
pissed
no,
that
no.
Logan was like,
No.
I call it a wash tub. No, you don't.
No,
Call it a
I
wash
don't
tub.
call it a
Wash
wash
tub
tub.
is-
I said you
didn't know
definitely
what a
know
wash-
what a wash tub is.
I call it a washcloth, but
Okay.
that's a different thing. I don't call it a wash tub.
Okay.
No, I'm never gonna call it a wash tub.
This is why Warren
Yeah,
Buffett has a
I think
100
Warren
billion.
Buffett's alone on that. But like I
And
think
we
we all
don't.
I think we all know.
I think we all
it
knew
is.
what I was talking about except for Max.
I was thinking of a bucket. I've never called it a wash tub. Literally never in my life called it a wash tub. No
Yeah.
other lie.
Anyway,
I agree with
to
you.
summarize, usually you should be managing these two emotions.
Fucking
And it's
wash tub. That pissed me off. I'm actually mad now. Oh god, continue.
Maybe
Go,
I
sorry.
said it
Bro,
I'm muting myself.
probably the
Let's get
simplest
Warren
way.
Buffett on the phone.
Yeah.
Warren
Look up the
Buffett.
quote.
Like we said, the simplest way to approach the psychology of trading is to
Raining
like
gold.
acknowledge that there's fear and greed, and that those things might be driving your emotions whenever you feel scared that you're selling something, or you're getting happy when something shoots to the moon and you don't want to sell it.
I was wrong.
Oh, wow.
That's embarrassing.
The fuck? A wash tub? You don't know what a wash tub
Max,
is?
you know what a wash tub is. You're smart, bro.
No one calls it a fucking wash tub.
No one does.
It wasn't
but you
more-
know what it is.
I've watched
fuck it.
videos where people have said it, but they were paraphrasing
They're
him.
stupid. Okay.
Warren Buffett said, "Well, Max, you're probably
Instagram
gonna
poll.
do this.
Put it on right after
When
this.
it's- when
Wash
it's-
tub or
When it's raining
Bathtub.
gold, reach for a bucket, not a thimble." Do we know what a thimble is? It's a really small fucking little thing.
Sounds like you're trying to say
Symbol is.
symbol with a lisp.
Thimble.
Come on, man.
Well, I'm not, but that's what it is.
I actually don't know what a thimble is.
I don't
And
either,
Don't
but
one
I
of you
looked it
think
up.
you're all high
Well, let's
class
look
and
up-
know what a
let's-
thimble
Thimble.
is.
Let's look it up.
What's a thimble?
Oh, the thimble in my bathroom.
What's a thimble?
A thimble?
You ever heard of like a thimble in a tap?
I don't think.
It sounds like we all have lisps.
This is what a thimble. It's a metal or plastic cap with a closed end worn to protect the finger and push the needle in sewing. So you wear them on your finger. Right here.
But it looks like a tiny
Yeah.
bucket, which is why he says
Yeah,
it's a very
Warren's
tiny
starting to
bucket.
piss me off now.
I'm
Starting to
looking up
piss me
wash
off.
bath on Google and nothing
It's
comes
washed up,
What's
Max.
wash bath, Max?
Max, what's a wash bath?
Oh, sorry, tub. Wash tub.
Good lord. They
And
used these things in the 1800s, you idiot. Like out in the West on the
fuck you, man.
frontier.
I'm pretty sure it's
when
just
the hell was I born?
exactly-
2000.
Bro,
yeah, I
Warren
know.
Buffett was
We
born-
agree with you. No one calls it that. We were just saying, like you've heard that term before, like surely.
No. Surely.
Guys, we're wasting precious
I've never heard
podcast
of
time
wash
on
tub.
this stupid argument.
I mean, we're trying to help people out, and Max is getting mad over a wash tub.
Sorry, we're gonna do a poll on whether they call it a wash tub or a
No,
wash tub.
no one calls it a wash tub. It's just like we know.
We're doing a poll. We're doing a poll.
Just say, have you
Next.
ever heard of a wash tub? Yes or no?
I will. Watch our
But
next
Mike,
episode.
you said fear and greed, bad things. People don't use those correctly. You can use fear as your friend.
You can.
You can use that as your friend. When
If
people
you
start selling, people start panicking.
Yeah.
You can sit there ready to buy.
Yeah. And the summary of like utilizing these things to your advantage, I wrote down 3 things, and there might be more. You guys
Hate
add
this
to it
guy.
if you want. Just learning from others' mistakes. I think Buffett said this really recently. But
Warren Buffett said that too. What a guy.
if you guys want to, understand or not have to make the mistakes yourself, like if you're working with $200, go look at some other people or some other trades. I don't know where you could do this, potentially looking at maybe friends or people you might know personally. If you don't, try and Google it. But look at other people's mistakes and try and learn from those so you don't waste your own money making mistakes. If you have a little bit more money on your own, I sort of did this a few times where I didn't really understand how options worked.
Sorry,
So I took like $50 or $100 and I bought an option. And they all expired, and I understood what that meant after it expired, worthless. But there were a few I tried where I made like a couple bucks off of them. So it was good to experiment because I was like, okay, I see how, it's changing over time. I see how it's decaying over time because options decay in value over time as you get closer to the expiration date. All these little things about options that you learn but don't really make a lot of sense until you try it. I learned from that. So it's nice to do your own experiments too if you have a little bit of spare cash. And then finally, when things go
Losses are
bad,
losses.
don't just get mad. Ask yourself, why did they go bad? And learn from it. Learn from your
Yes,
own
learn from
mistakes.
it.
There was one study that we looked at on Forbes. I sent it to Jared in the group where there were like these 3 groups of traders that this doctor or this person was looking at. And he said the group that succeeded the most in the long term were the people who got frustrated when they lost money. But what they did was the reaction to it was really important. Instead of like risking more money or just stopping trading altogether, they actually looked at all their trades that went wrong and they asked themselves why it went wrong. And then they factored all of that learning and all of that information they gathered from their previous mistakes into their new investments and their new decisions. And ultimately, they were better off for it. And they became better traders. So that's a really great way to approach it as well. And that's really all I have.
Well said, Mike.
That's really all I have in terms of, the psychology of trading. I don't know if you guys want to add anything else to it, but it's pretty straightforward. And don't be slave to your emotions, especially when trading, because that can backfire pretty bad. It's already backfired on me a couple
Yeah.
times, as I'm sure.
I think
has
that's
to you
solid.
guys.
I just think depends how you're trading
Yes.
or investing. You can, I mean, like I said, I get happy when stocks go down. I'm not very excited when they go up. If the market crashed yesterday, if the market crashed tomorrow, I would celebrate. I really would, and I apologize.
So it was a good day for
everyone
you
losing.
today then.
By buying
It was
stuff.
when I see red, I get happy. Red's my favorite color. Yeah,
Because you're sitting on cash.
yes, correct. Now, obviously, if I put my money in and then it crashed even more, I was like, oh, well, that's not fun. I don't like red anymore. But then I just buy more. So it all depends on how you
enough.
invest. If you're playing options, you see the market crash, or you see the market go down, you don't like it. If you're sitting
That's
on
your
cash,
input.
you see the market go down, you celebrate.
Yep.
Sorry, everyone's 401ks and pension funds. I apologize.
You don't
Sorry,
have to
everyone that
apologize for
goes
anything. You didn't cause
absolutely
the market to go down.
bankrupt.
Yeah.
Yes,
Yep.
sir.
All right.
Anything else to add, guys?
Psychology of investing.
Wash tub.
we said at the same time.
I'm putting a poll on right now after this episode.
Speaking of polls
Max,
on
a
Instagram.
wash tub isn't the same as a bathtub, you freaking weirdo. We've established this.
Yeah, I just Googled it and saw that.
So what's the poll
I see
gonna
it
be?
now.
I don't know what the poll's gonna be.
Well, I figured that out. Actually, yes, I just figured that out now. I thought we were talking about a bathtub, but I just Googled it on my
I'm
own.
gonna
and I
act
didn't say
stupid,
anything.
so I
Guys,
don't have to look like I'm
can I
really
set-
stupid
can I
in this
set
whole
my pride
conversation.
No, I
aside?
just Googled it.
Can I set my pride aside and be honest?
Yeah, sure.
Go for it.
I also
thought it was a
I
bathtub.
also thought a wash tub was just an old name for a bathtub.
I thought it was too,
I
until I Googled
immediately-
it and saw.
I immediately thought of the metal, like outdoor.
That's what it
bath.
is.
Exactly.
That's what it is.
From like the 50s
Yes,
or
that
like
is what
out
it
in the
is.
West when they used to take baths like out on the frontier or the pioneers whenever they
That's
would
what
go
it is,
there.
yeah.
On the farm.
Well done,
Yeah,
Mike.
I thought it was a literal bathtub, and I was like, "How the hell is
Which makes perfect
what's
sense.
that
'cause
9-year-old man taking a bathtub
It makes
outside?"
perfect sense because Warren grew up
I get it
during
now.
like
Billionaire
the 50s
Warren Buffett.
and 40s, which is when they had those. They didn't have like sometimes they didn't even have bathtubs and running water. They would have to like make the bath outside and like they would wash themselves off in these.
I'm glad we've established this. 'Cause I am
Psychology,
fully on board
history.
Wash
You're getting
tubs.
it all this episode.
Yeah.
now. I thought it was a literal bathtub.
Okay. Also-
Psychology, stock tips, wash tubs are old people.
And
Bathtub.
rebranding.
Wash tub definition.
Rebranding.
Oh, and
Jared.
rebranding. Bearish and the Claw.
Yes, we are the claw. Yes.
We have new logos, guys. Check them out. Hopefully you like them. Let us know.
Put a lot of effort.
All right, Mike.
Jared and Michael.
Go for it.
Thank you guys so much for watching. Hopefully, if you enjoyed the episode, go ahead and leave a like.
Thanks, guys, for washing in the wash tub.
Thank
No,
you guys
we're
so
done.
much for
No
watching
intro.
our episode.
I mean, no outro.
If you enjoyed the episode, go ahead and leave a like and subscribe if you want to see more. Don't forget to hit the notification bell if you want push notifications straight to your lock screen when we upload. If you're on audio, go ahead and follow us on Spotify
Mama.
and Apple Podcasts.
Quibbo.
They're getting me this time. And don't forget to leave us a rating on Apple Podcasts. We're always listening. We're always reading the reviews.
5-star.
Finally,
It's lit.
if you want to keep in touch with us, you want to ask us questions, follow us on Instagram, TikTok.
Slap.
What's the third one? Instagram, not Slap. What are you talking about?
Discord.
Instagram, TikTok, and Discord, I think, are the main
Oh,
ones.
we really got you. We really
You
got you.
got me this time. This is watch
Yeah,
testing.
bro.
This is
Bro,
shambles.
this is
Normally,
watch
This is not good.
normally
He's
you,
good.
you don't even give a
Calm it down.
reaction. Yeah, this was.
I'm going to mute you right now so I can go through the rest of this. All right, perfect. I can't hear them.
Oh.
All right. If you guys want to get in touch with us, go ahead and get in touch with us on Discord, Instagram, and TikTok. And you can reach us there, ask us questions. We'd be very happy to answer them. All right. Hopefully you guys enjoyed the episode. Talk to you later. Peace.